And it's the midweek edition of Business Morning live on Channels Television. Good morning, good evening, wherever in the world you're watching from. I'm Ladi Williams. Let's dig in now to the oil market to see oil prices clawed back heavy losses today amid tight supply and growing prospects of new Western sanctions against Russia, even as signs of progress emerge from peace talks between Moscow and Kyiv. Brent crude futures touched a high of $112.78 shortly after opening, and we're up 86 cents to about $111.09 per barrel, reversing a 2% loss in the previous session. U.S. West Texas Intermediate crude futures gained 82 cents to $105.06 a barrel, easing a 1.6% drop on Tuesday. Saudi Arabia and the United Arab Emirates, key members of OPEC Plus, said the group would not look to take action against Russia for its invasion of Ukraine, saying the group's aim was only to stabilize the market and not to engage in politics. And back here, the president is stressing the need to increase revenue via taxation without raising taxes, saying that the synergy required for proper tax administration must ensure ease of tax compliance and stop multiple taxation. President Muhammadu Buhari was speaking as the special guest of honor at the second annual tax dialogue, which was held in Abuja, where he honored the country's top 20 taxpayers. Our State House correspondent, Kayla Magua, reports.
Stakeholders in Nigeria's tax space are gathered here at the Banquet Hall of State House in Abuja for a second national dialogue on how taxation can be harmonized for enhanced revenue generation. The Federal Inland Revenue Service believes this dialogue is crucial, as most of the taxable public are not in Nigeria's tax net. The executive chairman of the service makes a plea to the president.
We humbly invite the president to step in to dissuade political tax gladiators to sheath their swords. Tax revenue is an inherently a political issue. It should be treated as such by all, irrespective of their political leaning.
This dialogue will honor Nigeria's top 20 taxpayers. However, Nigeria's debt profile keeps rising. The governor of the Central Bank of Nigeria, Mr. Godwin Emefiele, says there's a direct link between non-payment of taxes and Nigeria's debt structure.
There is a need, therefore, for us to appeal to both individuals or corporates who have a responsibility to pay their taxes to continue to do so. Because it is only when we do so that we are able to raise revenue to fend for our people. It is very important that we do this, otherwise the government will have no choice in an attempt to ensure that it fends for the people or meets the needs of the people, will have to borrow.
President Muhammadu Buhari praises the Federal Inland Revenue Service for their achievements in 2021. He notes that revenue generation via taxes is crucial for national development, calling for ease of tax compliance and an end to multiple taxation.
It is my expectation that discussions at this 2022 National Tax Dialogue will be focused on what we must do to maximize legitimate revenue collection and massively improve the tax to GDP ratio. We must therefore improve tax revenue without necessarily raising new taxes.
Now, there are issues with the tax structure in Nigeria, and that's what dialogues like this one are supposed to actually address. Mr. President, they're saying that he would welcome any idea that ensures that taxes are paid without taxes being raised. It is hoped that honoring these particular Nigerians, who are said to be the highest taxpayers in the country, will encourage other entities to do the same. From the Banquet Hall of State House in Abuja, Kayla Megwa, Channels Television News.
Now to our first conversation. We see all markets have seen record levels of volatility since the war in Ukraine started. Now, demand constraints are also playing into prices, which have led to rising energy prices globally. Back here in Nigeria, the rallying oil prices haven't materialized due to oil theft, and Nigeria not meeting its supply quota. Joining us now is Dr. Yinka Okpeke, CEO, founder, Smart Gas. Good morning. Great to have you on the program.
Good morning, and thanks for having me.
Yeah, so, yeah, quite an interesting time, you know, interesting times in the oil market. We're seeing the federal government, you know, talking about oil theft and vandalism, you know, as factors, you know, affecting crude production. What's your thoughts on that?
Wow, so it's interesting that I've been hearing about this probably since I was born, you know, and it's still very relevant right now, you know. And so for me, judging from my experience and the way things are done in more developed economies that are all producing countries, you would expect that it's an integration of different things. Because from what I understand, there are different pipelines. So you have the crude oil pipelines, you have the gas pipelines, and then you have other products. And these are managed by different entities, you know. So like the crude oil is by the IOCs and other indigenous producers, you know, and what I understand is that the pipelines are created based on engineering codes, you know, so you now start asking yourself that it's not going to be one size fits all because different pipelines are going through different communities. So if you ask me, I'm going to be thinking things like there has to be a lot of innovation, technology, engineering, you know, community engagement, all the stakeholder engagement, and personnel is also very important, you know, because, for example, you can't say that if you have a pipeline that is as long as 500 meters, you're going to put policemen to guard it. That's not practical. And then you say, what if I deploy technology like drones? But drones also have to be integrated because even if a drone detects a vandalization, the drone is not going to intervene. You know, so it's really difficult to say it's a one-size-fits-all. You have to look at the community, but it's very important for stakeholders in that community. So you talk about the government, you talk about the host communities, you talk about all players that directly impact the pipeline. You now start asking yourself, where are the bridgeable, the breakable places there? So maybe the government is doing it to some extent, but to what extent is what you're going to ask about. So it's really a very complex issue, but you know, it really has to be dealt with because the pipelines are the assets of the nation and they are very integral in terms of revenue generation. So it's something that we need to look for long-term solutions towards once and for all.
Yeah, quite a myriad of problems there, but you know, for you, what short-term solutions, you know, can we put in place to just, you know, stabilize the sector?
I'm not sure there are short-term fixes to it because talking about all of this, the way I see things in Nigeria is that we kind of like cherry-pick solutions. We really don't look at it from the grassroots, from the depth of it. What exactly is the cause? So now we're kind of like doing, you know, something pitch and patch, that kind of thing. So in terms of pipeline vandalization, there are no short-term solutions. Like I said, it's an aggregate of so many things. You're looking at the traditional, conventional methods, then in addition to the very, you know, high-tech methodologies and things like that, you know. So you ask yourself as well, in terms of, there's one thing to have the pipeline, you're talking about maintenance, because I'm not sure whether I can use pipelines right now to transport diesel or petrol from one state to the other. Then you're talking about, are there corrosion in the pipeline? So it's a whole lot of things whereby the specialists in those industries and then the stakeholders really have to sit together to look at the pipelines on a case-by-case basis and determine, you know, what solutions in terms of, like you said, maybe medium-term and long-term, really.
Quite interesting. And, you know, also we've had that debate about fuel subsidy. You know, it's been ongoing. And, you know, for you, what's the solution here?
Fuel subsidy. So if you ask me, I think any kind of subsidy is a displacement cost. And these are monies that are probably supposed to go to other things like maybe healthcare, road, security, and things like that. You know, so the question I ask myself is, what are the cost-benefit analysis? If you ask people now, of course, they'll say that fuel subsidy allows you to make the product affordable for the average, you know. Back to what I'm saying. Over time, we have been into oil, but we haven't had sufficient infrastructure for us to actually produce and refine our crude oil. And that is why we're still exporting and then importing refined, you know. But now we're looking for short-term solutions, and the subsidy is part of it. So I ask myself, what's the cost-benefit analysis, which is what the government should ask themselves. Who is it really benefiting? Is it benefiting the importers, the private sector, the government, the citizens? You know, you start asking yourself. I really see it as there's a lot of corruption in it. There's not so much transparency in it, if you ask me. So even though in the short term, if they remove it, it's really going to affect the end user, because now price of products will increase, transportation will increase, living costs will increase, and all of that. But my point is, usually at a national scale, you always have to look at long-term solutions. So if Nigeria had been a place whereby the citizens believe in the leadership, they have made policies, as in Nigeria is in dire need of economic policies that has to be done by people who understand the economics of trade, local and international trade, not based on gender, not based on tribe, not based on who you know and things like that. So those are the things that are lacking, that makes us put in some policies, that are not really long-term. So if you ask me, holistically, I think it's a displacement cost, and I think that we're robbing Peter to pay Paul, which is what we usually do in Nigeria. And because Nigerians don't have integrity in the leadership, they question every move. One way or the other, there's no how things would not be uncomfortable for a while. But like I said, if you understand that it's for a greater good, it's easier for you to preach that message. So subsidy, it's a bit ish for me, even though I know that, of course, it's making fuel affordable for me in the short term, but really, how sustainable is it?
Well, we've seen a teaser, with the price movement of diesel there. And obviously, that could actually happen,
yes.
with PMS. And
exactly.
it was quite a run there. We see the prices of diesel, and it's obviously affecting
everybody. And, a friend of mine was telling me, and these are people that you will consider living very comfortable lives, and a friend of mine was telling me how, a generator packed up, she only had one. So now you're talking about, some people will tell you, I have a big gen, I have a small gen, I have an inverter, I'm considering solar. All of that just sounds really crazy to me. And these are expenses in addition to other expenses. And she was telling me how at midnight, her generator broke down, they all had to remove their clothes, her baby had rashes, they had to be fanning themselves. And I'm like, this is someone that on a good day earns a decent income. Now, what do you now want to say about the grassroots? For us, we want to use a truck for something. It tells us by Monday, it's 100,000. But if you don't do it right now, the price of diesel is going up by, Saturday is 150. So back to what you're saying, it's going to directly impact, the citizens. However, at the end of the day, like I said, when maybe the big elephants and the big dogs fight, it's the grassroots that suffer for it. This is typically the situation for it, because it's either in terms of the decisions, not making the right decisions, not putting in the right policies, not following through, no sanctions, for default, and so many things. That's what really leads to all these kind of issues, and it's just unfortunate that's where we are right now.
Right, and let's look at the Petroleum Industry Act now. It's been perceived to be the solution, to the challenges in this industry. Do you agree?
Yeah, I would agree on paper, and I would explain why. So the Petroleum Industry Act is good because, of course, it attracts capital in terms of local and foreign investments. It also attracts a decent return on investments for those who invest. I know that part of the core focus is also to improve gas development, to the host communities will also benefit, and it also brings about a fair level of transparency in the entire framework that governs the oil and gas sector. But like I said, that's on paper. Whatever policies are created are still going to be implemented by human beings. So it's just like business. I'm in business, and I always tell people every idea is a great idea. It now boils down to the implementation of it. So when these foreign investors are coming in with their funds, what are they met with? Are the processes really transparent? What you ask for, is that what you get? Are there things that are going to contravene their corporate ethics and things like that? So it really goes beyond it. So if you ask me, the PIA, it's a very good and a welcome development that would help us in terms of, local and foreign earnings and things like that. But in terms of the implementation, it brings me back to the people, the leadership. Who are those that are going to implement it, and how well are they going to follow it through?
Now, talking about implementation, what's it going to cost us, with this delay in implementation?
Well, you have to give it to the government, because really, I think it was just passed into, law 2021, if you ask me. So it's just like, old habits die young. The government has been used to old ways of doing things. They are known for all the bureaucracy and all the things involved. So for them to transition into the new framework and all that will probably take a while. From my understanding, contracts need to be signed. There's so many agreements that need to be reviewed. Related agencies and government sectors will have to come in. So in terms of what it will cost us, it's just what I've said now. now. So the host communities that would have benefited, employment and things like that, capital into the economy, increasing our revenue that we can use to do other things, so it's really, so that's really the reverse of it. So because it's a government thing, we really have to just hope that, part of what we're preaching to them is that government have to start thinking about running the whole structure like a business, corporate sector, be a bit more, proactive in the ways you do your decision-making process. If it can be done in 5 steps, don't make it 15 steps, So practical ways like that. So I'm not really sure how long it's going to take, but we have to just cut the government some slacks and help them to transition from the old ways. Yeah.
Okay. We've seen, divestment, from IOCs, at this time. But, what immediate steps, can be taken to, get private sector actually, invested, in the sector?
So I would be speaking from personal experience in terms of that, because I'm in the downstream gas sector. Like you said, I run Smart Gas, and I have to deal with the government sector because our industry is heavily regulated by the government sector, either at the state or at the government level. The major issue is always the bureaucracy. Do you understand? Everybody is just looking for what they can get from it. So you'll be expecting that you want something more transparent. Back to what I said, Nigeria has to transition to upscaling based on technology. Technology allows for scalability, transparency. I need to apply for something. What are the processes? It doesn't really have to be like you go to an agency and somebody's almost feeling like they're doing you a favor to say, oh, come with me, I'll help you. Automatically from the beginning, they're making it seem as if you already owe them. That thing really, the vibes are not good. So if you ask me, I would say the government should try to have a more transparent system whereby the strategies they want to use for implementation are really very clear. The vision is clear. They put in the right personnel who are qualified. There has to be KPIs. What are your key performance indices? Who are those that are measuring it? What are the sanctions for not measuring it? So all of it really has to do a lot with the efficiency of the government process. But they really have to reduce the process it takes in terms of their decision making and things like that, and communicate with a lot of transparency. So that can also, encourage people to invest in the system.
And we've seen, with this war in Ukraine, we've seen how much Europe is, reliant on Russia for its gas needs. And we see the Minister of State for Petroleum, saying that, Nigeria will try to meet this demand. What are your thoughts on that?
So I'm a bit confused because on one end, so I believe that charity begins at home, They say that it's the decade of gas in Nigeria. The government is doing a lot to promote gas adoption. I heard that based on statistics, about 2015, we're consuming about maybe 50,000 metric tons, but as of now, we're consuming about 1.2 million metric tons. And Nigeria still doesn't have capacity for it. And that was why, the Nigeria LNG, decided to domesticate all its production so that they can increase local demand. So I would expect that even though, helping countries like Ukraine, Europe, and and all of that is good because it helps us with foreign earnings, it's still important for us to domesticate, try to look at the local market, see how you can increase the supply, before we now decide to go global. So it's a good decision, but in context of what is going on now, like I said, in the gas industry, about 6 or 7 months ago, we're selling about a 12.5 kg for about 3,800, as at today is 9,000 naira. So you can see that the leap is about over 200,000, and you're expecting somebody who is living on less than $1 or $2 a day to afford that. And that's why you see somebody going to the gas station to just probably buy 1 kg, 2 kg, 3 kg in their tanks that can take more capacity because the economic power is really very low. So if you ask me, I think the primary focus is on domesticating it before you start looking at, the export opportunities.
So you're saying we cannot look at export opportunities at this point?
I'm not sitting on the seat of power, so I cannot be absolute to say we cannot. I'm just giving you my own suggestion that I would like a lot more focus to be on, increasing the capacity, the supply within before we start looking at other.
All right, but, for you now, there's a lot of talk about energy, transition at this point. Are there any homegrown solutions, for Nigeria at this point?
There are a lot, but on paper. So, like I said, we're doing a whole lot in terms of the downstream, but to increase capacity, you need access to funds. And that brings you to the likes of the central bank, the Bank of Industry, who talk about intervention loans. How accessible are those loans? I can have another session with you in terms of these intervention loans. I tell anybody, there's no loan we haven't tried to access in smart gas, but the truth of the matter is that it's just not possible. And then you ask yourself, there is proof of concept. You have seen what we are doing. You can see that the market is there. We import cylinders. The market is inexhaustible. We're always low on inventory. And then you're telling people, look at my book, see what I have. But then they're going to disqualify you because they say that maybe you want to borrow 400 million naira, bring a collateral that is 400 million or more than that. If I had that, would I really come to you? Do you understand? So you can't base accessing funds just on collateral. And then they'll tell you, maybe you should go and look for a tripartite collateral from a third party. That third party has probably used its collateral to get a loan from the bank as well. You get what I mean? So in terms of local solutions, there are. But the gas sector is something that is very capital intensive, and you really need to utilize, funds to be able to scale up and expand. So for us right now, we're just expanding at our own pace based on cash flow until we get credible investors who can then help us with the, cash inflow that we require. So yes, the opportunities are enormous locally, but we need the government to back us up. And that's the issue of PPP. Private sector already know how to do this. Some of them are already doing it. Some want to scale up, some want to go into it. But the conditions precedent, sometimes you really just can't match them.
All right. Yeah. Anyway, we're seeing, oil prices, trend downward from, all-time highs, so that's good for energy costs. And let's hope it trends downward, and let's hope for peace at this point.
Absolutely.
Thank you so much, Ayinka.
Thank you.
CEO Smart Gas. It was great having you on Business Morning.
Thanks for having me.
All right, so after the break, AFEX Commodities Market is next. Do stay with us. This is Business Morning. All right, time for the AFEX commodity update. For the week ended 20th of March 2022, the exchange saw more than 64% decline in number of deals, while total turnover surged by over 30%. We have Femi Kehinde, structuring and originating analyst at AFEX, joining us right there in Abuja studio. Good morning.
Hi, Laddie. Good morning.
Yeah, great to have you, Femi. So give us a rundown of activities on the exchange.
Yeah, so for the reporting week, we actually saw a 38% increase in the value traded for the week, as the value traded closed at about 1.12 billion naira. For the volume and the value traded, we actually saw a decline. For the volume traded, we saw a decline of about 4.2% week on week, as 1.9 million contracts were executed this week. And for the number of deals executed, we actually saw a decline of about 64%, as 191 deals were executed this week. For the financial benchmarks, we saw a marginal increase in the AFEX export index of about 0.606% week on week. However, we also saw a significant increase on the AFEX commodities index of about 1.01% increase week on week, to close the reporting week at 486.57 index points. For the volume traded across all commodities, sesame accounted for a significant bulk of the commodities traded this week, followed by soybean, maize, cocoa, sorghum, and cashew. We actually saw the execution of about 1.16 million contracts executed for sesame this week. And for commodities prices, we actually saw a marginal increase in maize prices of about 0.82% increase week on week, to close the reporting week at 234 naira per contract. For paddy rice, we saw a significant increase of about 2.13% week on week, to close the reporting week at about 242 naira per contract. For soybean, we saw a marginal increase of about 0.21% increase week on week, to close the week at 398 naira per contract. For sorghum, we also saw a marginal increase of about 0.12% increase week on week, to close the reporting week at 226 naira per contract. However, for cashew, we saw a significant decline of about 4.13% week on week, to close the week at 1,236 naira per contract. And for cashew, we saw a marginal decline of about 0.3% decrease week on week, to close the week at 688 naira per contract. For more information about our report, you could check our website, which is www.afexnigeria.com, or you could follow us on our social media at afexnigeria.com or COMEX by AFEX.
All right, quite an interesting price movement on the exchange, Femi. But let's take the conversation forward now. Let's, review the market performance, the fourth quarter of the year, including factors that might have, affected the market. First of all, give us an assessment, of the performance, of the commodities exchange for the fourth quarter.
Yes, so we actually saw a significant increase in the level and the value traded for this reporting quarter. That is the first quarter of 2022 as compared to the last quarter of 2021. And this is actually very significant as this is a quarter significantly away from the harvest, which usually occurs between October to November and December. We saw the increase of volume traded or number of contracts for about 24% as 84 million contracts were executed this week. In terms of our financial benchmark, again, we saw the FX Commodity Index reporting above the Nigerian All-Share Index of about 0.9 percentage index point. In terms of commodities prices, maize and cashew were actually the top performance, closing the quarter with about 33% increase and 24% increase quarter on quarter. It's quite interesting because we actually saw these commodities reporting above the average inflation for the quarter, which is about 15%. So it's interesting to see that the commodities are continuing to provide a hedge against inflation, preventing the erosion of capital over time.
All right, Femi, that means I should be hedging, with commodities at this point. But, for you, what are the key highlights, during the quarter?
Yes, so in my perspective, I would want to look at the key highlights from a domestic and international perspective. For the domestic market, we actually saw the advent of the petroleum scarcity and how this was supposed to downplay into the cost of logistics and commodities prices over time. Like we've rightly discussed in previous segments of this program, we know that farmers usually stay in areas away from economic hotspots. So people or processors who usually use these commodities will have to procure logistics services or will have to engage aggregators in order for them to transport it for them. So at the end of the day, the price or the cost of commodities is added or priced into the commodities, and it's somewhat downplays into either the profit margins of the processors or it moves downwards to the end consumer. In terms of the international market, we actually expected a lot from the Russia-Ukraine crisis in terms of with regards to the fact that Russia and Ukraine are the largest producers of wheat, one of the largest producers of wheat globally. And we know as a country that is largely dependent on wheat, we know how we expected this to honestly trickle down into the cost of importing wheat into the country or other substitute goods that processors will honestly want to move to, since the commodities might have been scarce in this sense. Also, we know the cost of fertilizer and other agricultural inputs, of which Russia and Ukraine are actually major players in this global market. However, these factors did not really play into commodities prices for the quarter, as we saw a lot of the processors or a lot of the large processors actually exiting the market as they had been able to stock enough inventory for about 2 to 3 months. So yeah, I mean, we expected more, but the effects of these two events were actually downplayed significantly.
Quite an interesting year for commodities. We've seen most of them hit new highs, with geopolitical tensions at this point. But what is your outlook for inflation at the commodities market, for the next quarter?
Yeah, so it's very interesting to see that the top statistical house in the country actually estimate that the average Nigerian spends over 50% of his income on food. And if you look at how the Monetary Policy Committee had retained a lot of its benchmark, and how this honestly trickles down to the cost of capital for agri players, I believe that these players would continue to, or rather the cost of incurring or the cost of capital that they can access would honestly continue to be too expensive for them, or the financial products will not be suitable for them. And as a result of this, we know that it's either there's going to be a trade-off whereby there will be little produced and there will be too much demand. And following the law of economics, that's demand and supply, you know that more demand, less supply would increase or cause prices to keep moving forward. Also, we know that the dry season harvest wasn't able to produce enough commodities to supply or cater for the need till the wet season harvest. So as a result of this, we know that when the big players begin to enter into the market again in order to procure commodities, there would honestly be a strong upward pressure or demand pressure on these prices, and it will move on an upward trajectory. So we continue to expect that the cost of commodities, or rather the cost of food in Nigeria, which is mostly fed or driven by the cost of commodity, will continue to be on the rise, and this will honestly have an effect on inflation over time.
Right, and looking from an investment perspective, now how should players position themselves, ahead of the quarter?
Right. So, thankfully, we have private players like FS Commodities Exchange, which provides a means for capital market players and other investors to get into the commodity space without having to physically own warehouses, buy the physical commodities from the open market, interact with aggregators, and all that. So because of the existence of AFEX as an exchange, we have provided that marketplace for investors like yourself and myself and institutional investors to buy into spot contracts, which is backed by commodities in the warehouse, and trade these commodities in accordance to their investment objectives. So as I rightly said in the early segment of this live segment, it's worthy to note that commodities continue to post a return above average inflation. So it is advisable for investors to get into the commodity space, buy into this contract, hedge against their inflation, and also look for superior returns in these trying times.
All right, Femi, let's see the way commodity prices play out, for the rest of the year and other quarters. Thank you so much, Femi Kehinde, structuring and originating analyst at AFEX. Thank you for coming on. All right, we'll take a moment now. All right, now time to drill down on other markets. And we have Ini right there with the details. Great to have you, Ini.
Thanks, Ladi. Good morning and welcome to the market segment. Let's start with the fixed income space. What happened yesterday? Well, notice yesterday when we had that conversation, analysts say that there's more liquidity in the space now and rate is expected to taper. So we want to see how investors are reacting to these factors. So in the federal government bonds, we see that yesterday we had 13 deals, and the most favored was the one maturing on 2026. A lot of securities are maturing this week, and so we expect even more liquidity this month, or this year, 2022. We're going to have a lot in May, in June, and all of that. But for yesterday, we see that investors favored the 2026 January bond more. It traded valued at 5.6 billion naira, and the high there was 107.73%. And at the end of the day, the federal government bond yesterday raked in over almost 9 billion naira in just one trade. We say it's an average trading day for them. I guess we're beginning to see the result of that liquidity that is flowing in the market. In a treasury bond also, we see it was just 3 deals there. I guess the federal government bond is more attractive. Looking at the yields there, 4.10%, and then the value is 1.5 billion for just 3 deals, which was traded yesterday. The CBN bills, the central bank bills yesterday, was only 1 deal. You don't have a lot of attention going on in that market yesterday, but I mean, it was what, 4 billion naira. That's what more than what happens in some markets. Meanwhile, the open market operation did not have any attention. I wonder what happened there. I mean, for a whole day, I guess all attention was just on the federal government bills. Remember that we had that was the most favored. And then I said the NASD, we see activities coming back here, positive yesterday at 0.07, getting close to 1 trillion naira there for the market cap. We hope this will happen, because what happens in this market is that we see a movement one day, the next day, and then before you know it, we see the market remains unchanged for a while. I'm sure we'll have analysts who would tell us some of that. And then the NSD OTC market yesterday were just 5 deals there, valued at 4.35 million naira, and the volume was 62,000. It's good to see that there are some activities in the NSD OTC markets, but we need more activities after all. There's more liquidity now after the MPC meeting, retaining all the parameters. I mean, investors should have a little bit of confidence, Laddie. One would have thought that we would see more here now.
Exactly.
At least there were, well, 4 people out of the MPC committee did say that they wanted interest rates to be hiked, but eventually we had 6, voting for it to be retained. And so it's a bit of stability. At least that's what the CBN is trying to encourage, stability and opportunity for the policies, the economic policies, to birth more profits and more fruit, before we see a change.
The CBN is not looking to sacrifice, the fragile growth we're having at this point.
Yes, even though we have countries like Ghana, South Africa hiking rates, I mean, not even going to the West. But I mean, let's do a homegrown solution, like you asked one of your guests, the homegrown solution. I guess that's what CBN is looking at.
Exactly. Well, I think we have Choma right there standing by for us at this moment.
Oh, okay. Good to have you, Choma. Choma, good morning. So tell us, we see that we know that there was more liquidity in the market, so we expect more activities right there. So tell us, what else should we expect this week with a lot of the securities maturing?
Well, there's an MCB auction today, and 143 billion is an offer across 3 tenors with 138 billion on the 1-year tenor. What we expect today, like you rightly said, is because of the liquidity we have in the system, there's going to be a lot of interest in that space. We expect slight moderation, or maybe the rate will maintain at 4% on the long end, but we know that we're going to see a lot of interest in that space.
Yeah, we also see that in the Treasury bond, sentiments were mixed. How come we cannot understand the sentiments or the decisions of investors at this time? What's really driving investor sentiment?
Well, it's inflation that's driving investor sentiment. Inflation is at 15.60, and well, Treasury bill is at 4%. So it's a negative return for anybody trying to invest right now in the Treasury bill. So what we expect is that people will try to play short so that they can quickly rejig their portfolio. So it's a mixed sentiment across. And next month, in April, we don't expect a lot of liquidity to come into the system. When there's no liquidity in the system, you see a lot of investors trying to discount their assets to get liquid cash so that they can play around it. So if that happens, that would affect the rates, and we expect that the rate will begin to trend up. So like you said, mixed feelings. People are waiting to see and to try and get the best we can yield-wise.
So what happened in Omo yesterday? There was no deal, no activity whatsoever.
Well, Omo is at the discretion of the central bank. I think for them, if there's liquidity in the market, banks can be able to function effectively. They can be able to also, lend, to the people in the market. So I think managing system liquidity is at central bank discretion. So there was not Omo auction last week as well. So, well, I don't know. From what we know is that the Omo we have, there's not a lot maturing. So I don't see the central bank trying to retap any longer for Omo.
So is there anything that can happen in the market now that you think can just bring a burst of new action or new decision by investors?
Well, what I think that can happen in markets is that we can see from what happened at the auctions today, we will take a cue rate movement-wise from what happened at the auction today. We also expect to see the central bank intervene tomorrow on Friday retail. That will also help us with the reactions you will see in the market.
All right, Choma, thank you so much for sharing your time and thoughts with us this morning. Choma Odufix Income Dealer with GT Co. Well, I think Laddie will take a break because...
Quite interesting times we've seen, even with the U.S. Yield curve there pointing towards a recession in the U.S. So fixed income markets right now are quite interesting, you know, at this moment.
But you know one thing about the Nigerian market, Ladi, it looks like the Nigerian market does not respond to what's going on, or, you know, the factors that drive other markets do not necessarily drive it, at least to the predictable direction. It seems the Nigerian market could have been a good hedge.
It has a mind of its own at this point.
Have a mind of its own. I guess we're just that special. And, you know, this brings me back to some of the conversations we've had about a large informal sector, you know, sectors that are not captured in the system. So because they are not captured in the system, then you cannot really predict or affect them the way economists, you know, or analysts, you know, would expect. Exactly. So I guess that may be part of it, because back there in the West, you're talking of the US, you're talking of the UK, you know, when a decision is taken or there's a factor in the market,
you quickly see the impact.
Exactly, and you can almost predict how the market or investors or other variables, other economic variables will react to it, you know, but it's...
Well, we've seen, you know, the MPC actually retain rates at this point. It remains to be seen if these rates can actually stay, you know, retained, you know,
exactly,
at this point
because
going forward.
Yeah, somebody said that. I mean, we had 4 out of 10 asking for a hike, even though at different levels, you know. But this might be a sign that by the next meeting, which we should be in May, you might have more people asking, or more of the members asking for the rates to be hiked.
After all, seeing hawkish tendencies actually
we've had
growing
16 out of 18 meetings. We've had the rates being retained. So I guess about time to get ready for a hike in rates.
Let's watch out. Let's watch out for the body language of the MPC at the next meeting. All right, after the break, we're going to drill down on what happened in the equities market. That's in a moment. Do stay with us. This is Business Morning. All right, now for more markets. Now, the equities market, it looks like it's sitting pretty below the 47,000 points at this point. And
that's a sad news.
Yeah.
That's a sad news since it went down. Was it late last week or early this week?
Exactly.
It's gone below the 47,000 mark.
Any buying activity
and because I know how long it took us to get to the 47,000 mark, and now we've gone below it. So
yeah, we don't want to lose that mark yet.
Well, we have lost it. We have lost it. Just before we get Tajuddin Olayinka to join us on the show, we see that the market closed in the red yesterday. Bearish sentiment everywhere, not just in the fixed income, 0.11 and 25.246. That's what the equity cap, the sector, the activity chart, broadly red. Or Ladi would say it's a sea of red, or an ocean of red. You know, it was down, and then deals down from 5,000 the day before to 4,000 now. Value has been in 2 billion for a while, but unfortunately now we're now at 1.79 billion. We have Tajuddin Olayinka now joining us to give us analysis of what happened. Good morning, Mr. Olayinka. Thank you so much for joining us.
Good morning. Thank you for having me.
Great, great. So yesterday was another red day, more profit-taking. I think yesterday the banking sector, Zenith, Stanbic, people are not ready to come back to the market yet.
Yes, I think what we saw yesterday was more of a cautious trading. You could also see that in the value, even volume. What happened was that, you know, during that rally that we had, the year-end rally that we had, you know, at the beginning of the year, especially even towards the end of 2021, you know, the year-end rally pushed market to a level where, you know, people have so much expectations, and the moment results are released, you tend to see a different market, you know, where whether expectations are met or not. So, but what we have seen, you know, over the last say up to 3 months now, is, you know, speculators taking position ahead of others and then getting out of the market once they see that the market has reached its peak. So they are the ones actually depressing share prices. It's not that anything serious is happening. It's just speculators taking advantage of the fact that prices had moved ahead of, you know, the use of results, and so they should not be taking their profits and move on. But the truth is that eventually they will still come back to the market. But the real investors are still watching. They are waiting to see whether the market will bottom out, and then they can come in again and enter the market. So those are actually the ones depressing share prices.
You said they will still come back to the market. Don't forget, you also have a competition in the fixed income market. Don't you think some of them are perhaps eyeing the fixed income market?
Well, some of them might be there, but the truth is that there are other things you have to consider. If you are in a market you are selling and you have not made as much as 10% of what you have put there, then automatically, if you do more than 100 million, then you'll be paying capital gains tax. So those are things that will make investors to exercise caution. I expect investors to actually come back to that market, especially those who have long-term views. It's not necessarily those who have short-term views. The people who are living or who have just taken out their profits are those who have short-term views, not long-term views. The long-term traditional investors are still in the market, and they will surely come back once they see that market has bottomed out.
So a lot of corporates are paying dividends at this time. Where is that swaying investor sentiment?
Like I mentioned earlier, it's just, investors, those who want to take dividends are still there. But those who don't think that they should take dividends are the ones leaving. Now, let's look at what happened 2 days ago, and I think the same thing still repeated itself yesterday. Now, the moment Zenith Bank was smacked down, some investors, especially these speculators, still went ahead to push down the price of Zenith to meet up with the price of GTCO. That is not like peer-to-peer pricing of a security. But the truth is that those two companies, those two securities they may have the same fundamentals, but they don't have the same initial value. So those things are just some kind of irrational behavior you see in the market from time to time. Eventually, those stock prices will recover. And market will bounce back to even above 47,000 index points.
Do you see the market recovering today? Any hope?
Prices are low. The truth is that the market is, market is largely underpriced. Even before they started dropping the price to the level we have it today, market was largely underpriced, and so market is still largely underpriced. Though we may still see that cautious trading, because what investors are waiting for is, are they tired of taking profits? Have they exhausted themselves? If they haven't, then they have to wait. So that's what is happening, cautious trading.
All right, Mr. Olayinka, I guess it's two groups of investors. One investor's watching to say, are they done taking profits so I can come in? And the other investors are the ones actually taking profits. Thank you so much for sharing your thoughts with us, Mr. Olayinka, Tajudeen Olayinka, stockbroker with Valmont Securities. Enjoy the rest of your day. So, Ladi, just before I give it back to you, we see that the sectors was also a sea of red, except industrial, no movement there yesterday. And that's what happened in the market yesterday. Keeping our fingers crossed for a positive outcome today.
Fingers crossed, Anini. I'm wondering, are you done taking profits?
I'm thinking about that, actually.
All righty, thank you so much.
Thank you.
All right, now let's drill down on more markets there. We see the crypto space having a little bit of a pullback at this point, but we look at the fear greed index at this point, checking the sentiment in the crypto market. We see it's at 55 points, stating the market right now is in greed after being in fear and extreme fear for a while now. Let's look at the market cap, $2.15 trillion. That's down about 1.39%. Volume traded $120.12 billion traded in Bitcoin. That's up about 2.02%. We see Bitcoin dominance sitting at 42.04% at this morning. Price of Bitcoin, we see $47,381. That's down about 0.39%. We've seen a bit of a mild pullback with price of Bitcoin this morning after extending gains and increasing above the 47,500 resistance zone. We see Bitcoin even broke the 48,000 resistance and traded as high as $48,200. And we're seeing a little bit of profit taking happening right there in the market. Price of Ethereum this morning, $3,396. That's down marginally about 0.44%. Volume traded $19.46 billion. And we see Ethereum also moved above the 3,400 resistance, but it's just a little bit below that level at this point. Some traders still expecting some price movement there with Ethereum Looking at top loss by market cap, we're seeing it's mostly red on that counter. Just Solana in the green, up about 1.47%, trading at $111.64 per coin. BNB there still above $400 mark there, but we haven't pulled back there, down about 0.37%. And we see Cardano $1.19 per coin. That's down about 2.29%. All right, let's bring in Gilbert Drapata right now, a digital market analyst. Hello, Gilbert. Good morning.
Yeah, good morning, Mr. Ladi.
Yeah, so it's all about the Axie Infinity hack. You know, the hacker made away with about $600 million from the maker of Axie Infinity. Quite an interesting one there. What are you hearing about this?
Okay, this may just be the biggest hack on the blockchain-based gaming network because such amount is huge. But this hack was made official by Axie Infinity team that validator nodes and Axie DAO were compromised, resulting in the loss of about 173,600 Ethereum and about 25.5 million USDC from the running bridge. So they said the attackers used hacked private keys or passwords to forge fake withdrawals, and this was noticed when a user was unable to withdraw his funds. But they have spoken to the public that they are in for the long term and will continue to build. But there are key points we just need to notice about this event. One is that the running bridge is compromised. And this is a big deal since the Axie Infinity blockchain is one of the biggest gaming blockchain we have there. So it's a little bit scary, but they are working with law enforcement agencies, forensic experts, and cryptographers to recover the funds or to reimburse the funds. Two is that the AXX and SLP on the network are safe. And everything will be fine, or everything should be fine, because there are many professional bodies and institutions helping to investigate this issue. We also have the Binance team. Binance team has also reached out to them and also helping to investigate this. But this is also learning the hard way, and learning the hard way because the Axie Infinity team is one of the biggest blockchain out there. They probably should have been more conscious of their security, but this isn't new. Almost all the biggest blockchain out there have also have a test of this. Even Binance, Ethereum, Solana have all suffered this. But with this, they are also stepping their security of the blockchain, and this will bring more consciousness to other blockchain out there that security should be paramount, and also the users. Users should also know that the fact that you're on a blockchain does not mean that you are necessarily immune to security. You're not necessarily immune to hack, except the blockchain themselves are more conscious about their security vulnerability.
Right. I guess these are one of the major risks with, you know, the crypto space there with most of these hacks, you know, coming out of nowhere. All right, Gilbert Drapata, thank you so much for coming on the program.
Yeah, thank you.
All right, so that's a wrap on the crypto segment and the program for today. Thank you so much for watching. Don't forget to join us by 1:30 p.m. on Business Incorporated for more updates and developments in the world of business. Thank you for watching. I'm Ladi Williams. Bye-bye.